Hello and welcome back to the Elion Forex YouTube channel. I know it's been a while since I shared a video on this channel. In fact, it's been 5 months, 5 good months since I shared a video on this channel last. But today I'm back again with a brand new video. And in this video, I'm going to be answering a question I got on one of my most recent videos. And the video I'm talking about was the video where I talked about internal and external liquidity. So I will link it at the top right hand corner of your screen. For those that are yet to see that video, I would recommend that you see the video, because you have to watch that video before you understand what I want to talk about in today's video. All right, so let me show you the question. So this is the video I'm talking about, internal and external liquidity explained. So in this video, I talked about internal and external liquidity. So you can go and watch that video to understand what I'm talking about exactly. So after recording the video, I got this comment from Joao_con, and he said, "Thanks for this awesome presentation, but I have some questions, please." Said, number one, is this applicable to a specific time frame, or can we use it with multi-time frame analysis? Yes, it's applicable to multi-time frame. Remember that the market is fractal. Whatever forms on the 4 hours can also form on the 1 minute time frame. So the market is fractal. You have the same patterns being formed across board, across all time frames. So but what I would just try to point out or highlight to you is try to keep it simple. Don't make it complicated. Maybe just stick to 2 or max maybe 3 time frames. But then it all depends on, I don't want to generalize it, you get, because different traders have different approach. So depending on your approach and depending on your understanding, but what I'll just try and say is keep it simple and don't overcomplicate it. So he asked another question. He said, assuming we have up to 3 internal lows before a break of structure, how many of it are we expecting to be taken out before picking up a high? And number 3, he said, can we know specifically the internal low which the market will reach to? So I think question 2 and 3 are the same, and that's what I want to address in this video. So let me just do a quick recap. So remember, we said when we have maybe a structure like this, you have a structure like this, where we have series of highs and series of lows in the market. So how do we mark our structure using the internal and external liquidity concept? So if you recap from that video, the previous video, I said that for you to mark any high or low in the market, there must be a reason why you are marking that high and why you are marking that low. You have to ask yourself that question all the time. So you can see we have high everywhere. I don't want to go deep into that in this video. You can watch that video to understand what I'm talking about. But let me just mark out my valid highs and lows now. So this is a valid high for me. The reason why is because we took out internal liquidity, and this is also a valid low because we took out external liquidity. This is not a valid high because this low did not take out anything. This also did not take out anything. Those are not valid highs for me, but this is a valid high because we took out internal liquidity, and this is also a valid low because we took out external liquidity. So now this is a valid high because we took out internal liquidity, and this is a valid low because we took out external liquidity. So for me, this is my structure based on this schematics. And the reason why I have my highs and lows is because of liquidity. Low, okay, high because we took out internal, low because we took out external, high because we took out internal, low because we took out external. And the story goes on and on and on and on. So the question that comment was asking is, in a case where we have 2 internal liquidity lows, for example, how do we know which of these lows that the market is going to take? How exactly do we know which of these low the market will take. All right. So let's just go into the charts and let me show you how I approach it, and if it works for you, you can implement it in your trading, and if not, that's fine. So this is Euro USD 15 minutes. So if you look at this 15-minute chart, you can see that the market was trending down, and after that we shifted when we changed character, when we broke this high, shifted market structure, we came back in, and then the market started pushing up. So now we can see now that we are in an uptrend on Euro USD on the 15 minutes time frame. It's essential to note that we are talking about the 15 minutes time frame now, because if you look at another time frame, this might actually be a downtrend. On the 15 minutes time frame, we are bullish. So now let me just mark out important structural points. I will start from after this red line because I want to go lower to a 5 minutes time frame later in the video, but I'm not using the paid trading view, so I can't view past this red line in past price action. So let me just mark it from the bottom so you get what I'm talking about. So this is our lowest point, and this was where we changed character. All right, so remember we are still using our internal and external liquidity concept. The reason why I marked this low, the reason why I marked this high was because we took out internal liquidity, and the reason why I marked this low is because we took out external liquidity. So let me just annotate that quick. I don't want this video to be long, so this is our break of structure. All right. So now that we have our break of structure, we have our high because we took out internal liquidity, right? Okay. So what else do we have? We have this is the lowest point. We have our low because this low was the lowest point before we took out this external liquidity. Okay, BOS. All right. So we have this as our high because we took out internal liquidity. Don't worry, I would get to what I'm trying to do, but I want us to pass this red line first. Okay, so we have this low. Ding ding ding. So we have this low because we took out what now? Took out external liquidity. All right. So now we have our price range. I'm sorry, there's still one more. Yeah. So we have our price range now. This was our previous price range. We had this high, and remember the market is trending up. So we are looking for majorly buys now. So we have our high and we have our low, right? So now after creating this low, the market broke this previous high. So since we broke the previous high, now the market is trying to create a new range, because now we have our impulse. We are anticipating a correction or a retracement that we can now look to buy from, right? Okay, so this is what we have. Let's look at all the internal lows we have. We had the market doing something like this. We have we have the, all these are internal structure. We had this. I'm marking the internal structure now. So we have all this on our internal structure. We have this, 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 and we have this, and then we have to the upside. Okay. So now look at what I just marked now. Maybe I should make it a little bit further because this is where it gets interesting. So look at, normally I don't mark this on my charts often, but because I've trained my eyes to see what I'm looking for. But if you look at this now, remember we are still on the 15 minutes time frame, and we are trying to know what internal liquidity or what internal structure the market is going to take before going up. So this is the way I approach it. So now let me show you as a schematic first before I come back to this chart. So let's say we have the market doing this, and we have identified this as our break of structure, right? And we are trying to get our internal liquidity points where we are expecting the market to take. So this is our break of structure. Okay. So for me, what I normally expect is I expect the market to at least take out this first low before I start looking for my buys. So without the market taking out this first low, I'm not going to look for my buys. So for me, this first low is a necessity for the market to take out before I look for my buy. But in order for me to identify this low as my value liquidity point, there are some things I watch out for. Those that follow me on Instagram might have seen my chart where I marked chalk liquidity, where I do something like this. You know, I have an arrow and it says chalk liquidity. So this is where I explain what that means. So for me, I want to find out if this low, remember, all these internal liquidity points are valid, but I start from the most recent one, because there are some times that the market will just take out the first low and continue going up. There are sometimes it will take out the second one. There are sometimes it will take out everything and now start going up. So my first interest will be this first low here. So for me to validate this first low, I must see what I call chalk liquidity. It's just a name. You know, the name does not matter as long as you understand the concept. It's just the name that I gave it in order for me to understand it in my own way. You can give it any name you want, or I don't know if anybody else trades this way. If they trade this way and they give it whatever name, but it was just something I observed by myself. In order for me to validate this low, I want to see what I call a chalk liquidity. So I want to ask myself the question, is this low a chalk liquidity? So there are two ways. For example, there are two ways I identify my chalk liquidity. For example, since we're on the 15 minutes time frame, I want to see a chalk liquidity on the 15 minutes time frame or on a lower time frame, say my 5 minutes time frame. I want to see that this low is a chalk liquidity. If this low is not a chalk liquidity, then I can now start, going to see this low or whatever other low that we have within the range. So now, let's look at our chart. What is the first low we have here now? So let's assume that this price action has not formed. Remember, this is the price action. This boxed area, let's assume that this was where price is. So before price gets here, sorry, I can't use the bar replay. Before price gets here, this was the low we would have been anticipating price to get to, right? We have this low, we have this low, we have this low. So this is the first low. So the question I ask myself is, this low, is it a chalk liquidity? And what do I mean by chalk liquidity? So let me draw it out. So let's say you have a price action like this, going up like this. You have a price action creating higher in an uptrend, higher low, higher low, and all of a sudden you have this fake chalk, right? And after the fake chalk, you have the market continue going up, right? This chalk, people have order block here, expecting the market to reverse, right? And for people that are long, they expect that, okay, since this is a fake chalk, it's just a liquidity sweep, and they see this now as a break of structure. And I'm not saying it doesn't work, but for me, I get stopped out a lot. That's why I had to resort to this measure or to this to this concept. So now they have order blocks seated right here. So the market comes back and do something like this, pushes up. So for me, this low is what I call a chalk liquidity. This one right here. I know it's a little bit complicated, so you might need to watch the video more than once. Okay, so let me take this off first. So you have the market creating higher highs, higher low, higher low, higher high, higher low, higher high, and all of a sudden you have a change of character. And after the change of character, you have the market trading up. So I am not of the school of thought that you should start entering from there and start going long. I still expect the market to do one more liquidity sweep at this low. So I want to see this pattern either on the 15 minutes time frame or on the 5 minutes time frame after identifying my first low. So after identifying my first low, I can see that there is no chalk liquidity on this 15 minutes time frame. So what I can do is I can scale down to the 5 minutes time frame. So now let's look at the 15 minute structure now. Let me take out, I don't want to take out the line yet. Okay. If you look at the 15 minute structure, let me use the brush tool. If you look at the 15 minute structure, we can see that from this low, the market did this, came back down, right? Is this higher than that? Okay. After coming back down, so the market do this. This is one leg. Probably in another video, I would talk about how I mark my structures correctly. So after doing that, we saw the market do this, and we saw the market do this. Remember, this is the low we are interested in. This low right here, this one. But as you can see, we still have the same structure, just like we have on the 15 minutes. There is no chalk liquidity, which is this pattern. I would have expected the market to do something like this, you know, come back, then I will now start looking for my buys here. But we have the same pattern we have on the 15 minutes. So for me, in as much as I want to see this low is not valid. Likewise, this low, there is no chalk liquidity anywhere around here. Okay, so let's go back to our 15 minutes since we cannot see any chalk liquidity. So for me, I still expect, you know, the market to give me that chalk liquidity before I react to what the market is going to do. So now let's see. So, you know, the market kept going up. It kept pushing up. We have higher low, higher low, higher high. And all of a sudden, what do we have? Let me take this box. All of a sudden, what do we have? We had the chalk I was talking about. And after the chalk, what do you see? You see traders, you know, buy and trying to sell here. And after the chalk happens, the market takes them out. And as it takes them out, you also see buyers trying to buy here as well, and the market stops them out. So for me, I want to buy below this low. So if you see my chart and I mark chalk liquidity, for those following me on IG, if you see my chart and I mark something like this, this is what I refer to as chalk liquidity. So let me take this off. This is my chalk liquidity. So it is after this chalk liquidity happens. This chalk liquidity is the internal liquidity that I'm expecting the market to take. So after the chalk liquidity happens, I will go. Normally, sometimes I use other blocks, sometimes I don't use other blocks, because for me the main thing is the liquidity. Then if there is another block as confluence, fine. But even if there is another block like we have here, even if there is another block, I will still wait for confirmation. I'll still wait for confirmation to long the market. You understand? I wait for confirmation to long the market. Depending on lower time frame, I don't know if my 3 minutes time frame is going to show this transaction, but let me just try it. So we can see if get an entry. Oh, so you can see it's not showing there. If not, I would have shown you how I might have entered. This is where we are trying to come to, but trading view is not allowing me to get there because I'm using the free plan. All right, so hopefully we'll find another example. So back to the 15 minutes. Remember, for me, this other block does not matter. If I'm to use another block, it's just an extra confidence. It's not the main thing I'm looking for. The main thing I'm looking for is this chalk liquidity. So after I identify this chalk liquidity, I wait for my lower time frame confirmation. So right here, you know, because I'm not able to go to the 3 minutes time frame, we don't know if we got a 3 minutes confirmation here. But let's assume that we got the 3 minutes confirmation. We would have bought here, probably somewhere around there, you know, with our stop loss maybe below this low, and target wherever we want to target. So if you are a 1 to 5 trader, probably, I'm just saying, because now we don't know if we were able to get an entry or not. If you have 1 to 5 trade, normally you want to target these highs, but if you have 1 to 5 trader, you might want to close maybe partials at 1 to 5 or thereabout. If we were able to get an entry on maybe the 1 minute or the 3 minutes. But as you can see, after that, what did the market do? The market stopped out. So, but for me, when I get these kind of things, I don't bother myself too much, because I know that we have our chalk liquidity taking again. I still look for my buys. So I still look for my entry drill. Whatever your entry drill is, maybe you wait for whatever your entry drill is, you identify it, but only after this chalk liquidity has been taken. So there are some times that maybe I enter like this, the market can stop me out twice, and by the third time it goes. But after the third time, I just sit on my hands and see what the market is going to do. In this kind of scenario, I don't want to take more than 3 losses. Or ideally, after the first time, the market goes. But there are some times that maybe you got an entry in this place, the market stops you out. I look for another entry and the market just goes. So let's assume that maybe after taking partials, we got stopped out. I still wait and look for my pattern. If the pattern presents itself, for example, let's say somewhere around here. Remember, this is just an example because we cannot verify on our lower time frame. You just target these highs, and at this size you can close your partials and try to swing the rest depending on your risk appetite and all of that. And for those that do maybe super high time frame analysis, maybe on your 4 hour, the market is telling you that it's still coming way up there. You can try to hold the rest of your position up until that point. But that's not the point of this video. The point of this video is not entry. It's just to make you understand what internal liquidity the market is going to take out. So let's keep marking our structure. This video is getting long and I don't want to make it long. Okay, so after we took out our chalk liquidity, what do we have? We have what now? A new price range formed after we broke the structure. So let me annotate that. So we have this, and this is the lowest point. We have our internal liquidity again. So this is our internal liquidity. You can see price going up, coming down, going up, coming down, going up, coming down, going up, right? So at this point, as price is going up, since you have broken the structure, as price is forming these lows, internal lows, we can start marking them out. So as you can see, this is the first internal low that we have. So the question I ask myself is this low a chalk liquidity? So again, on the 15 minutes, this low is not a chalk liquidity low. So what do? I go to the 5 minutes. So on the 5 minutes, what can I see? On the 5 minutes, you have to pay very close attention. So on the 5 minutes, I can see that. Let me use my brush tool for that. So on the 5 minutes, I can see that the market is doing this. We are creating all these structural points. Ding, ding, ding. What do we have here? Chalk liquidity. Chalk liquidity. Let me mark that again for those of you that were not following close. So we have what? We have this high. We have this low. We have this high. We have this low. We have this high. And we have this low. Then what do we have? We have this high. And what do we have? We have this low. So what is this? What pattern is this? This is my chalk liquidity. Remember the first chalk, people waited to buy. Then we break that chalk. And people waited to sell there rather. Then we break that chalk, people waited to buy. Then this low, where people are waiting to buy, becomes our chalk liquidity. And in this example, this low becomes our chalk liquidity. And as you can see, it's the same low that we marked on the 15 minutes. That's the same low. So we want the market to take out this low first before we buy. So, and as you can see, that means that the low we marked on our 15 minutes time frame is correct. So now for those that trade order block, for me personally, like I said, I don't really focus on the other block, I focus more on the chalk liquidity. So let me mark it out. So let me mark it out. So we have this as our chalk liquidity. So, but as you can see, look at this big candle. I'm sure this was a news. I think, yeah, this was FOMC Wednesday. This was an FOMC candle, if I'm not mistaken, 14th of June. So for those that trade, let me take this off. For those that take other block, maybe the other block. But for me, remember, after my chalk liquidity, I just want to go to my lower time frame to look for what? To look for my entry, drill, regardless of whether it reacted from another block or not. But if you're another block trader, as you can see, this one played out perfectly. Unlike the previous one, you might have gotten a trade here, and if your stop loss is too tight, you might have gotten stopped out. But for me, let me see if the 3 minutes time frame is going to show here. It's not showing. But I remember this trade. I was able to get a 3 minute entry. Okay, so after the chalk liquidity is taken out, if you look at the 3 minutes, I think I entered somewhere around here, because this was FOMC. This was after London close, so I wasn't really looking for entry. So if you go to your lower time frame, you will see that there is a form of change of character here, and I think on the 1 minute time frame there was an unmitigated order block, probably somewhere around here, yeah. So London session the next day, I was able to get this buy. So that is how I approach it. So now let's keep going. So now we are broken. Let me take out this ink. So now we've broken structure again. This video is getting long, so probably this will be the last example I'm going to give. So if we continue to follow structure, you will see that after we broke this high, we had this big impulse move, and within the impulse move, we have all these internal liquidity points. So let's mark them. So we have this, we have this, we have this. So if you notice, I'm not just marking every high and every low. I have a criteria for marking my highs and my lows. So, but probably in another video I'll talk about that. So we have this high, we have this low, then we have this high, and then we have, let me see, where is the low that took this out? Okay, then we have this low, then we have this high, right? Okay, let me see to see we mark the correct thing. Okay, so now if you look at this now, what I just marked now, you see something interesting. First, at this low right here, we have what? We have our chalk liquidity. And how do I know it's a chalk liquidity? Because what? We had the markets going up. Remember, we had the markets going up in this manner. And all do we have? We had the chalk all of a sudden, right? And we have this, right? So this is our chalk liquidity low, just like we have here. Okay, so I just wanted to make sure we're on the same page. So we have our chalk liquidity right on the way down there. And also, what else do we have? At this highs, we can see that the first low that we would be interested in, I wish I had buy place, would have been even more interesting. But let's just make use of what we have. So we have this low right here. Yeah. So this low on the 15 minutes is not a chalk liquidity, and I'm certain that we can check it when I go to 5 minutes, but I'm certain that on the 5 minutes is also not chalk liquidity. But if you look at this low right here, what can we see? We can see that this low, this one right here, is a chalk liquidity. Why? Because we still have the pattern playing out. We have the pattern this, and this is our chalk liquidity. So this, like this, and this is our chalk liquidity. I'm using the magnet tool. Okay, so this is our chalk liquidity right here. Yep. So I want to buy after chalk liquidity gets taken. That's what I want to do. But as you can see here, we don't really need to go to the 5 minutes time frame. Why? Because we can already see our chalk liquidity on the 15 minutes. But I know some of you might have a question about this load. What about this load? Is it not a chalk liquidity? Let's confirm on the 5 minutes if that low is a chalk liquidity or not. So on the 5 minutes, you can see it's not a chalk liquidity. It's not. This is a chalk liquidity. Okay, cool. So after our chalk liquidity, what do we expect? We try to buy on the lower time frame after entry confirmation, and we target this high. But let's see if TradingView is going to allow me view the 3 minutes time frame. I pray, I wish. It's still not, but it's fine. No problem. But I just hope you get the concept, because this video I'm not even talking about entries. I just want you to identify how you can. So for those that trade order block, for me, I do use order block for this strategy, but I just use it as an extra confidence. Let me take this off. It's not something I anticipate that okay, price must get into this order block and all that. So if you look at this, you see that we have one order block here, we have this bullish candle, and we have imbalance sitting there. So you can decide to use that, but for me, it's not really necessary, as long as, and as you can see, it also aligns with New York Open for those that trade Q zones and all of that. So for me, I just want to see price take out chalk liquidity, then I go to maybe my 1 minute or 3 minutes time frame to look for an entry. Basically, I don't want to overcomplicate the whole thing. I don't want to overcomplicate it. So after that, we are on the 15 minutes time frame. Let's just mark our structure. I think that will be the last example. So maybe in another video, I might talk about entries and I might talk about how to mark valid pullback. But this is an example of how I'm able to identify which liquidity is valid, which liquidity the market is going to take. So, and as you can see, after the market took out the chalk liquidity, which is the internal liquidity, we did what? Took out the external. We took out the external. Bang. So after taking out the external, let me just annotate what we have. This is what we have. We had I'm trying to rush the video because it's way longer than I expected. Okay, so we had this. Yep. Okay, so now what can we see now? We can see that, you know, after the market did this higher low, all of a sudden, what do we have? We have what? We have this change of character right here. We have this change of character right here, meaning that, you know, this is an indication that the market is trying to shift bearish now. But as you can see, let's see if we are to mark our internal liquidity. What are we going to mark? I know I said that was going to be the last example, but let's just take this one because it's interesting, because the market broke structure again. Yeah, so let's see. So we can see that we have mark out the internal liquidity points. We had this. Let me use the magnet to gain some. We have this. These are the highest points. This was an equal high. So this was an equal high. So for me, this is just one. This was just one price leg, basically. This was just one price leg, because this was an equal. So this is one leg. So for me, this would have been where I would have been seen as my internal liquidity. You know, it also coincides as equal high, which is also a draw on liquidity. And there's another block sitting right here. So as you can see, we have our internal liquidity. Internal liquidity. But how do we know if this internal liquidity high is valid? We want to see chalk liquidity. So as you can see, there is no chalk liquidity visible on the 15 minutes. So we'll go to the 5 minutes. So on the 5 minutes, what do we have? So we have this. We have the market doing this, and as you can see on the 5 minutes, it's a chalk liquidity. Why? Because remember, this is the downtrend version now. We have the market coming down, and all of a sudden we took the previous high as a fake chalk. Other block trying to buy there, we took it out, and this is going to be our chalk liquidity high, just like we have right here. So that high is valid because it's a chalk liquidity. So as you can see, unfortunately, the market did this thing, and I'm happy with this example. That's why I chose it, so that you understand that it does not work 100% of the time. Just like everything in the market, if you're expecting to see a strategy that works 100% of the time, then you are definitely wasting your time. Well, at least from my experience, you are definitely wasting your time. So after price took out this chalk liquidity, if I get an entry, remember the other block is just there as just an extra confluence. It's not really what I'm looking for. Let me mark this as chalk liquidity. Okay, so if I'm able to get an entry maybe on the 1 minute or on the 3 minute, I would have entered here, and probably the market would have stopped me out, which is fine because we have been on a way since we started backtesting, been on a winning streak. So it's normal. So don't expect a strategy that is going to give you 100% hit rate. In fact, a 90% hit rate, I'm not saying it's impossible, but consistently, can it be consistent? That's the question. So as you can see, we have a losing trade here, but this is just the basic concepts of how I identify my internal and external liquidity. I don't know if that makes sense. So I guess this is where I come to the end of this video. The video took longer than I expected, but it's fine as long as the knowledge and the communication is well disseminated. I'm fine and I'm happy. So share this video with your friends. If you are not subscribed to this channel, smash the subscribe button, like, drop your comment. As you can see, I always read the comment. It was as a result of one of the comments that I have this video up for you guys. So if you like or if you want, you can join the Telegram community. So my Telegram community has hopefully just stick around, we might be active soon. My inactivity is due to personal reasons, but we might be active soon. And if you want to contact me, you can send me a DM on Telegram. I would link my Telegram DM link on this video, so you can send me a DM on Telegram. So I'll see you in the next video. Stay safe and trade smart. Bye for now.